Let's get you out to Richard Morris, who's joined us this morning to run through the charts. He is head of research. Richard, morning. Let's have a look at the currency boards first. You've got a euro-dollar board for us here. Shall we pick it up?
Yeah.
Where do you see it going?
Well, I think a lot of people are actually looking at the top of the market and saying that we've got a triple top in this, and the market's pretty well finished and it's going to get a big setback. I happen to be of a largely different view of it. I think what the market is doing is it's had an accelerated breakout, having had a good consolidation period, and we're now sitting there consolidating again. I do think the market is getting ready for another breakout. We're getting declining highs off the lower levels of the market, and I could actually see the market taking out through this 149.50 level and then pushing on to 153.39. We're actually quite bullish on the euro overall, and we do believe that the euro could actually be the stellar performer of the currency market.
What does it do against the pound?
Against the pound, we're actually really out on a limb on this one, because we've had a look at the old sterling against the Deutschmark charting, and basically we've got a breakthrough on this from a massive head and shoulders which goes back over a long period of time, and we're actually looking for the euro against the pound to make parity probably during the course of this year. What we're actually looking at the moment, so long as the market is holding over 0.7395, we're looking at a nice consolidating bottom, the top end after doing the breakout. We could see a possibility of a setback, maybe back down to 72.54, but overall we're still very bullish of the market, and we would be looking for buying opportunity rather than selling opportunity. On the top side, if we do break through the recent highs, then we'd be looking for a target price of around 79.69 before we see the next interim high.
Richard, let's move you on to gold. A lot of people wondering if there is a lot more upside on this chart now.
Yeah, I think that's been one of the big things that people have been looking at. Is we've got the largest divergence we've actually seen in the gold market since we saw that high in 2006 when we went shooting up to 730, and there's a lot of similarity. But the thing is, as much as we've got this big divergence, what one's actually looking for is percentage terms of that divergence. We've still got some upside, and I wouldn't be too surprised to see the market maybe making up to 1,058 as the next interim high. When we get to these sort of extended divergence levels, what we tend to find is that the market does do some pullback, and I wouldn't be at all surprised to see the market eventually get some pullback. But ultimately we do look for gold to make 1,200 and possibly as far as 1,400 going forward. Probably those sort of moves will come later in the year, and I would probably think about beginning of the third quarter, which we'll see the top end of the market.